Oh, that's some good shit. What's up guys, welcome back to my channel, GG Forex here, and on today's video I'm going to be going over my new game plan. Remember from yesterday's video or my last video, whenever you're watching this, I'm down 3% on my Ftmo challenge. I needed to come back with a new plan, and the reason why I'm 3% down is because 1, I trade on my phone, 2, I'm trading during my 9 to 5 job, 3, I was trading too many currency pairs, so I couldn't focus on a certain pair's behavior. Each pair has a different behavior. Each person has a different pair they prefer to trade. Some people prefer indices, some people prefer commodities, some people prefer forex, okay? So I like GU and NU. That is it. That is all I'm going to be focusing on this new plan. It's not a new strategy, it's just a new plan to get me through this challenge. This Ftmo challenge. Remember, you got to make 10% in 1 month. I could have done this a long time ago. I know that. If you guys have been following my episodes, you know that I could have done this in 1 trade. On my very first trade on EJ, okay? If I held it overnight, boom, I would have got a 1 to 16, pass with flying colours, okay? I haven't done that. And there's weird reasons why, but I'll explain that in the group and different other videos, okay? But this video is purely about me coming up with a new strategy plan, same strategy, but a new method of attacking it, whilst I'm still in my job, I have to trade off my phone, and I can't look at a load of pairs. So this is how I'm gonna do it, and this is how I found my oh my god moment. I can actually make a bunch of little moves that add up to make big numbers. Those big numbers help you pass this test, okay? So yeah, buckle up, you're gonna enjoy this. There's gonna be some knowledge bombs. You're gonna be like, how do you do that? It doesn't make any sense. It all makes perfect sense, and it'll make more sense after you watch the video. So guys, let's get on with this video and let's crush. Right guys, I hope you can see me there. What I've done, I've already marked out what I'm going to be looking at, is because it's just going to save time in the video. And basically what this is, these blue lines are higher points of interest, and I don't do channels and all that stuff, but I highlighted them just to say that's what we're going to focus on this video. It's this channel here. But if you remember, GU is bullish as a mofo, okay? It's barely coming back. It's doing very little retracements to obvious points of interest, like here, here, and here as well. It just ignored it and it's sending it up. And the reason for that is if you go on the weekly time frame, it's got one mission, and that is to get out of their orders up here. They could want to go for these new highs, but for me, what I'm noticing is this is just sending it up here just to get out of these orders. Remember, these are orders in the market. They are contracts. They're whatever you want to call it. People are in drawdown. They put a huge buy up here and they sold it off. Maybe billions on the way down, but they're losing billions because it is down. So they're manipulating price to come back up to break even out of their buy orders. They might want to come up past these highs and make a couple more billion, but all I'm saying is their main objectives is going up, okay? So if we're selling down, it's a short-term thing. We do not hold these overnight. We do not hold these for that long at all. But there is a lot of opportunities to be making money during that time, okay? And when you're following just 1 or 2 pairs, you can see these moves. You can wait, you can anticipate, and you can pull the trigger, because you know what that pair is doing. You know it inside and out. You can probably guess where it's going to be at certain times of the day. If you know that pair well, which is what I'm saying, it's going to take you time to learn pairs. It's going to take you time to find your favorites. It's going to take you time to figure out what pair moves, how you like it to move. Does it respect certain areas? Does it not? Does it follow how you like to look at the markets at all? All this stuff is going to take time, and it is the way it is. You're not going to be like, I don't get this pair. What am I going to do? I mean, it is what it is, all right? You're just going to have to buckle up and just take it on the chin. I mean, I've done this for just under a year, and I've only just figured out what pairs I liked, what pairs I like, what pairs I get on with, and what pairs do kind of what I want it to do. How does it respect certain areas? And yes, I've repeated myself now, but let's just focus in on these areas. So this was a huge bunch of orders put in here, a reaccumulation to push upwards. So I drew on my fibs from here to this high, and this was that area. This is where I thought price was going to retrace to, so I drew that blue line up there. So what I'm saying is, if I see it starting to break structure to the downside, I know I'm only going to be selling to this area around here where I think price could retrace and come back. Same with this one up here. This is where they reaccumulated to push price upwards. These are my fib areas. So this is where I drew that line where I thought price was going to retrace to. And as you see, it got close to it and then just sent it off. All right, but I'll be showing you how you can sort of anticipate where you think price may be going to. Hang on, let's let my dog in. Go on, Eve. Come on. Come on, you're getting wet. Get in. Reggie, schmedge. He's in now. He's alright, just chilling. Right, so that's where you think price is going to retrace to. Alright, so let me just get my get my 15-minute chart. I like the 15-minute chart for some reason. I don't know why, but it just resonates with me. I like that candle. It sort of respects candles that I like things to retrace to. But yeah, so let me just, where's the replay tool? There it is. Let me just get this. And let's just, actually no, let's not do that. Let's, how do I slide across? Right, let me just take it back to here, okay? Take it back to here, let's delete these channels because technically they won't exist. So this is what we're seeing on the charts, right? We know the dollar is bearish at this moment. Well, sorry, bullish. It's bullish because this is going down. So the dollar index, this is what I like to do. I like to see the dollar index, and this is what I anticipate is going to happen for next week. I'm willing to buy the dollar, aka sell the pound and sell the New Zealand dollar up into this area, because if you have a look at the 4-hour chart, we got beautiful equal lows. We have an order where price has gone up to come down, so that move caused this big move down. So I'm saying they're going to try and mitigate out of these orders and then come down and take out all this liquidity down here. But so that means if I'm seeing breaker structure, which I am seeing on the 15-minute chart, because it's now making higher highs, higher lows, showing breaker structure, I'm only going to be doing that up into this green line, and then I'm going to wait to see what price is going to do, because it might do a distribution and then start coming down again, and then going to go for those lows. And then that means obviously if the dollar's coming down, I'm going to be buying GU, I'm going to be buying NU. That's just the short and curlies of it. That's why I like these pairs. They are majors, the spreads are really tight, and also it just respects what I like to do, which I've already said. So let me go on GU. Did it come back? Did it come back? Yeah, oh no, okay, that's what happened. Right, get this on. And let me just go to here. And just delete that one as well. Right, so let's just zoom in so we can see what the fuck's going on. Right, so obviously as you can see, the dollar is bullish. Look, it's making high highs, high lows. But what we can see here is if you're following this pair, you'll be able to see it straight away. So if you're not following this pair, or you're following too many pairs, you're going to miss these moves, which is what I was doing. Right, we got higher highs, and then we look at the RSI. It's going down, all right? So we can see there's going to be some sort of reversal, but we need to wait for proof to see if it is going to do it, okay? So let's just play this out. Now we've got breaker structure. Okay, so we've broken previous lows. Now we need to wait for a candle that I feel I'd like to enter on. So let's just see what's going on. We're now in Asian session. So green is London open, yellowy is London and New York cross, and then red is New York. Okay, just so you guys get an idea what's going on. Right, to me that is a good candle to go on. Look, we had a huge push. This took that liquidity up there, mitigating these candles, and it's made nice equal lows down here. So to me that is a good candle to go on. Right before London Open, starting off your week. So to me, I'd have a short there. And remember, pound pairs are quite wicky, so I like to go above the wick. And I'm going to have these equal lows there. So 1 to 4. I know a lot of you guys are saying a 1 to 4 is not very good, but it adds up, trust me. Okay, we're in. Let's have a look in a 5-minute chart, see what's going on. Back to the 15. Seeing if there's any more possible entries. Boom, there's our 1 to 4. There's 1 to 4 right there, okay? Now, there is a possible other entry right there. Look at that, right in New York, right before New York closed, price went up, mitigated out of these orders here, right to the 50%, and then just dropped off. So this area there is what I have my attention on. Okay, so let's just see how price reacts. Right, okay, it's going out there. I'm just gonna short it. Put it there, what was that? 4 pip stop. And let's just go to this candle here. I'll say that low. That low there to me looks doable. But to be on the safe side, I'm just gonna go to the bottom of that candle. That's a 1 to 7 if it plays out. So mitigate out of the order. Boom, there we go. So we've got in 2 of those trades just by following this. So one day we've had a trade wick us in and then get us out at a 1 to 4. And then right at the end of that same day, we saw this, and then during the Asian session, price came up, mitigated it, and then came down. Okay, so it depends on your trading plan, whether you want to hold trades overnight, blah de blah. But for me, I like to enter on candles that are formed during the London and New York. London and New York candles really have a lot of weight to it because they're the big players in the market. But as you see here, this move took out all this liquidity during the Asian. So if it didn't take any liquidity, I probably would have just ignored this candle and waited for a London Open candle. Like I could have just waited for this London Open, because this London Open pushed, mitigated that Asian candle, and then came down. So I could have got a re-entry off this London candle if I wanted to do that, and got another maybe 1 to 2, 1 to 3. But I didn't want to do that because I bet reward to risk on this. And yeah, it's just a smaller candle to go on, because if I did this, if you have a look, if I do a short on this London candle, it'll be to there. So that's a 11.5 pip stop. Let's say I wanted the same target as that. It's a 2.5%, or if I did the same target as this one, it's just under a 4%. So I could have got another 1 to 4 if I really wanted to. But again, it all depends on how much leverage you have, what your daily risk is, because this will be a 1%, right? This will be 1% risk for the day. So if I lost that 1% and I go in and do another trade and I lose that one, I'm down 2%. Remember, on the Ftmo, you only get 2.5% risk per day. So you need to play that into factors. Yes, you might have loads of setups, but you need to choose the best ones. Okay, I'm just showing you all the setups. I mean, we've got a 1 to 4 and a 1 to 7. There you go. We've got 11% gain. Ftmo challenge passed technically in 1 day. Which is what I'm saying about the patterns. It's insane, right? Let's just keep playing it out. So, what immediately brings to my attention is, one, we got a great opportunity to get in here. We missed it, it was going too fast. But, let me just see, okay? This is why I wouldn't have done this trade, even though it would have been a little beauty, alright? We would have got wicked in, but our targets, we're kind of running out of targets here. We're sort of like guessing. There is no real reason to go lower, okay? This was our lowest point where we'd be comfortable going to, and it's already gone past it. Right? Yes, you could have got another 1 to 6, almost a 1 to 7, but if you have a look, right, price is going down, making lower low, but strength, RSI, going up. We have divergence, and is already in our green zone. Okay, so this is where we're anticipating price to retrace. Not retrace, but now start to reverse. Remember, it is heavily bullish, this pair. So we're expecting price to go up. We're only comfortable selling price to our points of interest, which is already in, and we've already made 11%. Let's not be greedy now, bitches. Okay, so now we need to wait to see the continuation of the upside. We want to see break of structure. This has already proved it to me. Look at that, right in London Open, bang, push price up. Let's just start flicking it through. Now we've got savage breaker structure. This is brutal. Look at that. It's now past this high and now it's past this high. Now we're looking at a trend reversal. We've got RSI going up in our key area. To me, this 15-minute candle is the one. All right. So I'm going to be putting my long position in because that's where all the orders started from. It's a bit laggy. So we've got a 7 pip stop. Now where's our targets? Now we know it is bullish. Okay. We can go for higher points of interest because we know that is where the trend is going. I'm going up here because these are where the equal highs are. Let's just see what happens. What else like that? Boom. There you go. You've got almost, wow, you got 10.5% gain there. It literally just came in, got out of that order, which caused this huge move, broken all the structure. We know it's bullish. We're going with the trend, and then bang, straight up. Okay. So what's that? We've got 1 to 4, 1 to 7, 1 to 10.5. You've got, let's just call that at 17%, could call it 18%, it's probably closer to 18%. You've got 18% in 2 days of free trades. This is what I mean. You can get these sort of moves when you understand order flow, and you understand market structure, and you understand smart money concepts. It all makes sense, okay? The trend or the order flow on this is fully bullish. We know it's going up, but we know the banks like to retrace the money to get a better price to then go up continuously. So they like to sell it high and they like to buy it low because the banks are greedy motherfuckers and they can get away with this stuff, okay? So as long as we know that, there's money to be made and there's orders and contracts they like to get out of to make it as easy as possible to push up. I mean, look how long it took the flag down to make this 1 to 4, 1 to 7, right? Look how fast it took just to get that 1 to 10.5. That is where the money wants to go. And we have higher time frame interest in where that money is going. That weekly candle, they are losing money. They are sending price, they're going full send on the buys to get out of those orders, possibly go higher. There might be more targets, we don't know, but all I know is at this time, the dollar index is going down because the pound is going up, okay? Let's just keep playing it out. What other opportunities do we have? Well, slow down. Okay, these candles are taking my interest. Let's just see what's going on. So we can see price is going up. What we got? Price going up. Relative interest going down. I've already drawn my point of interest, so let's just see what happens here. This is probably week 2. Let's just do it slowly so I can read. There we go. Right, price is still going up. We're still got away from breaker structure. Still haven't broken any of these lows, and we're still making higher highs. Okay. Just need to wait, sit on your hands, be patient. We know it's fully bullish. Like, fully. Okay. Still need to wait, still hasn't broken structure. Still need to wait. There we go. Now we've got broken structure. We have broken these lows and we have broken these lows. What caused that move was this candle here. So let's just wait for a pivot. Bang! Look at that. Dirty. Not only that, it's giving us more targets as well. So it's taken all these people buying out of here. Okay, so you could have made money along the top if it was short term. If you held it for long, the banks are gonna destroy you. Okay, so you need to watch and just, if you already made 18% previous week, you could be done for the month. I'm just saying, like, how much do you need to make, man? God damn, you could just chill out. No, oh god, I'm going the wrong way. Let me put in a short. Okay. There to there, that's the candle that ordered the move, and it's London Open. Remember, London Open, it's just great time and price. Where's our point of interest? It's down here. Where's we got targets? Right there, look at that, equal lows. If it doesn't lag, why are you lagging? Equal lows right there. So what are we looking at? We're looking at 1 to 12 if it plays out. So let's just, wow, look at that, straight to that point. It depended on your spreads. Remember, because I'm doing major pairs. My spreads are raw, basically, on the Ftmo account. So that would have kept me in. That would have had squeaky bum, but if I wasn't looking, what time was that? I was at 4 in the afternoon, so I would have been working, so I wouldn't have time to really look at my phone then. I would have just looked back and be like, damn, that was lucky. But let's have a look at the lower time frame, because this is a big candle. You know, there's a lot of money in there they probably want to get out of, so let's just go down to the 5 minute time frame, see what we can see. Might be some more opportunities. Again, we're waiting for a big candle up and a big candle down. Flag in, might not be any more opportunities, but still in the money over Asian session. Let's just go back to the 15 minute chart, just make it faster. Oh, okay, that's a good candle. If you look at that on the 15 minute chart, boom, boom, boom. Could be a possibility, but I don't feel confident in it. And that's why I wouldn't be confident in it, because if I went in there, I would have lost. I wasn't confident in it because it created a trend line, which I know a lot of retail traders would have put their stops across. So I knew that would have been manipulated at some point, but we're still in the money. There we go. That's more of a candle I like. A big FU. So we go up, down, but does it break structure? Yes, it does. It makes it more interesting for me. Let's just see if we can put a short there. Is it going to win? Is it not? And have our targets down with these equal lows down here. If my targets get taken first, my trading plan is just to cancel that order. Right, targets get taken, cancel that order. So, there we go. We've got a 1 to 12 on the following week. Yeah, you could be done for the week. That's it. You're fine. And it's approaching this area, so we could be looking at a reversal. So, if you have a look, price, again, approaching our point of interest. Price is coming down. Okay, it's taking out those lows, which is our target, so it's taking out the liquidity. But look at the strength. It's working its way up. Alright, so now we need to find a candle that makes sense to us. I mean, that candle there, right in London, New York, London, New York close, or London close during New York, is quite tempting for me. Because look, that's the last down candle for this big up move, which it looks like it's already mitigated, so I'm going to ignore that, just in case you guys are saying it's hindsight. But we'll see if it worked. Yes, it would have. So now my next interest is this one. So that candle mitigated this candle, and now we've got this big up move. So I'll be happy putting a long position in here with targets on those double tops up there. And when you're selling, guys, in a bullish market, it will be making targets to the upside whilst it's coming down. That's what it does. It takes liquidity and builds it and mitigates all at the same time. The banks kill 3 birds in one stone, or possibly 26 birds in one stone. They are savages, all right? So that's just what they'll do. Targets taken, trade off the table, okay? It's just too bullish, it's sending it. Let's just see what happens now. Oh, that would have been a beautiful trade right there. I went way too fast. For those of you who didn't see it, let me just come back. It's going full send, right? It's going full send. It's higher risk because we know we've got this down here, but because we know the nature of what this market is doing, it is full send bullish. So the likelihood of this is already left loads of unmitigated candles previously, so the likelihood of it doing it again just to get to their destination faster, it's very high, right? This candle mitigated out of these orders. This one in London Open, right there in London Open, just before New York Open, caused this big up move. So I'm saying price is probably going to want to come down, get out of that, because this one never reached. This one reached that one, this one's never reached. So if I was going to put a long in here, the shorts there, 6 pick stop, right, where's our targets? Not 100% where our targets are. Let's just wait for a price start. There we go. Right, so this is our our point where price is now making a lower, starting to retrace, because if you look at your hand, right, so this is the candle that is to decide, this is the bit where you draw your fibs from, this is the pivoting candle, because you've got two lower ones either side of it. All right, that's how you think about it. So that's where I'm targeting. It'd be a 1 to 9. Mitigated it during New York Open. Played around a little bit. Got into the Asian session. That would have been another great candle to get in on, because this one drove the price down, took out these lows. But again, you still have this unmitigated one there, so that could have been another candle you could have got in on. So I would say that one's a safer bet than that. Let's call it the same targets. So that 1 to 3. And we would have been right. And then boom. Okay? so it just works that way, right? And then we're probably going to be up to date of where we're going now. We're in our point of interest. So this yellow area is IPA, and that green dotted line is our weekly bankers candle. So we're really approaching our point of interest. So now price is probably going to start flagging down. So just need to wait for proof. And I feel like we've already had it, because look, price is going up, but divergence is going down. We might have missed about 6 trades here. Yeah, look at that. Bang, gone. So this is what I was looking at before. Right before I made the previous video, this is where I got the brainwave from. So let me just rewind it a little bit. On a lower time frame, because the 15-minute was just too big for this time frame. This is our point of interest. This last down candle caused this huge up move into our area. So I think price is going to retrace to that area there. So now we need to wait for proof. Okay, we've already got divergence on a higher time frame. Okay, so now we just need to wait. Here we go. We've got a big up move before this huge bearish engulfing candle, which is also breaking these lows. So to me, that is a beautiful candle to get in on. If I go for that and then have it above the wick as a 6 pip stop, I'm going to go to there. So it's a 1 to 3.8. Let's just play it out, see how it works. Playing around a little bit. Flick this in, came down. That is another beautiful candle to get in on, because this candle mitigated that candle, which then caused this big fall move. So let's just get in on that. Again, above the wick. Just because this is what I mean when I go above the wick, because I know those pairs will sat a 2 to 3, 1, 2.3. It's come down, hasn't taken the targets yet. Ooh, very close. Very close again. There's a possible other candle, but because of what I just seen, that's a bit too risky for me. Straight up, straight down. I guarantee there's a beautiful candle in there with that 50. That is for no accident. Let's have a look. There you go. You could have got a if you stayed on a 15-minute chart and just did this one trade. Look at that. 15-minute candle there. Beautiful. Let me just, Jesus Christ, why is it up there? That's a 1 to 1. Look at that. Bang. In that candle, let's pick the same targets as everything else. Could have got 1 to 6, and we'll just play it out now. Bang. Done. So that's a 1 to, I can't even see it. Let's just go back on the, so what's that? 3.8, 2.39, 6.5%. So there you go, guys. That is how I'm reading the markets. That is what I'm going to do. That's just following GU. Okay, that's not including NU. But when you understand how the market moves, when you understand how the market behaves, when you understand what you need to wait for and where price is probably going to retrace to, you add all of these confluences into that area. Okay, so if I go on to the 1 hour chart, and what I'm going to do is put on my weekends. Look, 1, 2, 3, 4, 5, 6 trades made in 1 week. And it would have been, what's that, 12%, 9%, 3%. We're looking at almost roughly 30% growth in that 1 week. This week here, we did 3 trades, 4 to 1, 1 to 7, 1 to 10. So again, we're looking at high 20s in the previous week after that. So this is what I'm going to be doing. This is how I'm going to be targeting it. This is what I want to be teaching you guys to train your eyes to look for. This will take time. I know I kind of made it look easy, but that's because I've been practicing it for almost a year, okay? So you need to understand how the pairs move, what they like to respect, and what to look for in certain times of the day, certain markets opens, to really achieve these results. Because look, if you have a look at the entire higher time frame, all the price did was retrace back to this 1 hour candle. Okay, so maybe following next week it might come back to this 1 hour candle and then push up. Who knows, it might come down to that. You just need to wait and see and play the market of what it is showing you at that time. Anyway guys, I hope you enjoyed this video. If you haven't joined the GD Forex group, the link is down below. They're crushing it. If you haven't seen my story on Instagram, they're getting mad results. Like we're talking 1 to 7s at 2% risk, making 14% in one trade. And yeah, I'm super proud of that. It's just so epic. So yeah, the link in that is down below. And yeah, love you guys. See you next time. Stay safe. And hopefully the next video I make, I'll be passing this bitch. But who knows? See you again.